Good afternoon, everybody. Hope everybody's having a great weekend. Let's do a little market analysis for end of trading on December 10th. And we're going to do things a little bit different this week. What I have here is 3 charts shown. They're all weekly charts. The diamonds are on the left, the SPY is in the middle, and the Qs are on the right. Diamonds attempt to follow the Dow, SPY attempts to follow the S&P 500 index, and the Qs, of course, the NASDAQ. Let's take a look at action for last week and related to the weeks prior. So you can see in last week's trading, the Dow had a fairly strong down day below this first standard deviation line, which has really acted as a line of support, going all the way since prior to October. As a matter of fact, these lines go back even further. But that's a very bearish signal. On balance volume, let's take a look at this one here first. That's starting to roll over, which is indicative of these large red selling weeks here. We had this one strong green week here, but we didn't make a lot of progress above the prior high. So it's showing a little bit of weakness down here. And the ADX, you can see the ADX is down at a paltry 17.8, and the DMI minus now crossed the DMI plus, which is kind of a bearish indication. You can also see on the MACD indicator that we have a very strong, let me see if I can get a pen here, a very strong or a very clear to see negative divergence where we're making lower lows while the indexes make higher highs. So that's a pretty strong divergence that indicates weakness in the market. Let's take a look at the SPY. The SPY is looking fairly good. It's held up here at the first standard deviation line, which is a good indication that it's going to retain strength. But I'm a little bit concerned here about not only the increasing volume on the red days, but the MACD again has shown this sort of rotten negative divergence where you got lower MACDs and higher highs on the index, and that's not a good indication. But overall, on the weekly basis, the SPY is looking fairly decent. The Qs are the same way. It's holding at the support line that we drew in last week. Got some pretty high red days. You don't see as much bearish divergence recently. This guy's fairly flat while this guy is going up. But that's a bearish divergence in itself. What you'd like to see is new highs on the indicator while the prices are going up. The ADX is still holding its own. We got an ADX of, let's see what it is here, right about 28, 29. So that's continuing to indicate a trend. So it's a little bit of a mixed market. These SPY and the Qs are holding up while the Dow is in trouble. Can the Dow bring the rest of the market down? Well, it's only 30 stocks, so we'll have to wait and see. Let's take a look at the daily index, because the daily charts, because the daily charts I think are a little bit more instructive. Let me clear all those other drawings off. Okay, so again, we've got daily charts. This is the diamonds, this is the SPY, and this is the Qs. Okay, so now on the daily chart, we're trying to see a lot, we're starting to see a lot more bearish indications. You can see that prices on the Dow have dropped way below this standard deviation line. The Chicago line, which is the blue line, has dropped below the prices, which if you follow Ikimoku cloud charts, that's a very bearish indication. You're starting to see very large red selling days. The MACD is now in the negative territory, and when I mean negative territory, the signal line is below zero. That is a very bearish indication. If you go back and study charts, you'll see that in most cases, when the MACD signal line is down below zero, it continues to be very bearish until it rises up above zero. On balance volume is indicating increased selling on down days, which is not a good deal. And again, the ADX and the DMI plus and DMI minus are showing very bearish configurations. So one thing to note here on the ADX, which is this purple line, indicates the strength of the trend. In other words, if the trend is falling and it's starting to get stronger, you would expect this ADX line to increase, showing an increasing strength in the downward direction. And unfortunately, that's what it's starting to show. You can see that it has increased from where it was back in July. It's crossed above that, so it's starting to show increased strength in a downward direction. So I would say this, the Dow is in a very bearish situation. Let's look at the SPY for a second. It's still holding above the first standard deviation. Had a very big down day on Friday. MACD's almost below zero, and we're starting to see a cross on the DMI minus over the DMI plus, which is a bearish consideration. I think that what we need to watch for here this week is a base building right in this area here. And I think that's quite possible. We'll get some movement around this low. We might have some up days, down days this week. But what you're looking for is a base here that could sort of get us back in an upward trajectory here. If that doesn't happen, and we start falling in this direction like the Dow did, then I think this market is in a little bit more trouble. We see the same sort of thing on the Qs, but it's a little bit higher. The prices are a little bit higher than this first standard deviation. So the Qs really need to build a base in here, maybe in here somewhere. And out of that base, you'll get this action, and you'll get something that looks like this, or I think we're going to get something that looks like that. This top line on this cloud will support another level of support. Whether it holds there, if it falls, I don't know. I don't predict. I just watch what's going to happen. But again, if you look at the volume, we've got very high volume above the 50-day average volume on a down day. We got the MACD decreasing. It's not below zero yet, but the on-balance volume is showing it's very weak. And the DMI minus looks like it's approaching and might cross the DMI plus in this week's trading, even if we build a base. So that's a very worrisome development. So overall, I would look for a base building. I'm not sure exactly how long that's going to take if it continues to build a base, but I think the line of least resistance is unfortunately down, at least for the short term. So I personally have taken profits and have tightened up my stops on everything I own. So we'll see what happens this week. Now, I did have a lot of questions on Contra ETFs. Should this market really head strongly down? And we won't know that until the averages get below these green clouds. At least that's my approach for Contra ETFs. So let me just show you the Contra ETFs that align with each one of these indexes. And they're on this chart here. So these are Contra ETFs that go up when the associated index go down. On the left is the SDow, which is short for Dow. It shorts the Dow index essentially. The SH, which shorts the SPY, the S&P 500 index, and the SQQQs, which shorts the NASDAQ. You can see quite clearly that they are all starting to look a little bullish. So in contrary to what's going on with the other averages, you start to see the MACD get above zero. You start seeing the on-balance volume move up, and DI plus is above the minus. So you see the same thing on the SPY, and you see the same thing on the SQQs. Now, I am not saying run out and buy Contra ETFs. By no stretch am I a financial planner, and I'm not telling you what to do. I put these charts up to answer some questions as to how these vehicles react to the broad averages. But you can see that they're starting to look a little bit more bullish, although they're certainly not in an uptrend yet, and they tend to move very quickly. So, as always, you can contact me on my website at profitableswingtrading.com if you have any questions or want to talk about any of this analysis. I'd be more than happy to chat with you. So, hope this is useful. And if there is a subscribe button on this, please give that a click, and you'll get updates when new issues come out from my channel. Thanks. Have a great rest of the weekend.